Thanks so much for joining us today. I'm Marlin Bohling with you. I'm your tour guide to the ag commodities. Happy Friday and happy April 1st. Well, the grain markets are a bit of a joke here this morning because the corn market, after a bullish report yesterday, is flopping. Okay, what does this all mean? We have May corn now drifting lower, and now it's all the way down to 7.32 on the May contract, which would be 16 3/4 lower. After a high last night of 751.5. We're off of that by nearly 20 cents now. And in new crop December corn, you talk about some spread activity. It's still trading higher today, a penny and a half higher at 685 1/4. It is off its high by about 6 cents, but that spread has narrowed up today by about 18 cents. So a big time spread activity on the corn. Now on the soybeans, we have the May soybeans 18 1/4 lower, right at exactly $16. And November soybeans are down 11.5 cents. We're at 14.09, now 14.08 1/4, as it continues to struggle as well. So let's look at this wheat market here. We had some big gains in the wheat there for a while, and now they're gone. Look at May Chicago wheat, 9.99 3/4. So it has fallen below $10, and we're down 6 1/4. July down 4 cents at 9.98. So it's also under $10 now. In Kansas City, the May contract at 10.32 would be 2 1/4 higher, and still 20 cents off of its overnight high. July up 3 cents on the day. In the Minneapolis market, you have the May spring wheat 3 cents higher at 10.82.5, but here again, off of its overnight high by about 23 cents. So just losing all kinds of ground here and all kinds of momentum as we get into the daytime session today. It had bullish numbers yesterday. On the cotton market, you have July now 23 points higher at 132.30. December is down 10 points at 111.18. Just wanted to remind you, even with the lower corn market, we did have some corn export sales reported last night. USDA said we had sold 136,000 tons of corn to unknown destinations, and yet we still can't trade higher on the nearby contracts anyway. I want to bring in Chris Swift of Swift Trading and chat about these markets here a little bit. That is not necessarily the preferred reaction post-report yesterday, Chris. A lot of traders scratching their head on the performance on that corn and wheat market today. What do you think?
Well, actually, Marlin, you got two reports yesterday. You got the grain stocks report, which
Sure.
tells you about your old crop conditions, and you had the planting intentions, which gives you ideas about what the new crop may be. And they showed a little bit increase of corn stocks, so it's really not uncommon to see the front end down just a little bit and the back end up. As well, remember, we have been trading in inverted carry charges for months on end. It may be possible now that we see we've got at least enough grain stocks on hand to carry us through the rest of this summer, and then everything else is dependent upon the new crop and what it may or may not be able to provide.
Well, are we done trading on Ukrainian news? Or what if aggression by Russia and Ukraine, what if things start to intensify again? Would that bring the corn and the wheat markets back again?
Yes, it surely would, but because we're dealing with with old crop situations. So right now, without too awful much going on, the old crop sets back a little bit because we know we got plenty of supplies. Any new additive that might shorten the supplies right here on hand or create an increase in demand for whatever reason, then we could see the front end move back up again. Remember, all of the corn contracts yesterday set new contract highs, so you're down from yesterday's contract highs. That's really not down a lot considering what we did yesterday.
Oh, I'm glad you pointed that out for perspective there. Thanks for doing that. Just wanted to point out, I did see in regard to Ukraine, there was a Newswire story out this morning that threw a new wrinkle in there where apparently Ukrainian helicopters have crossed over into Russia and actually hit an oil supply terminal that is supplying the Russian troops. That was a new twist, as they have gone on the offensive the other direction a little bit this morning, and that has the market a little on edge too. We'll pause and come back here in a moment, and Chris will talk about this livestock trade, what's going on there as we head toward the weekend. We'll find out next. We are back with Chris Swift, and as we begin our discussion here about our livestock trade, I want to refer to that livestock summary that we had yesterday. And Chris, we did have some cash cattle trade out in the plains. wanted to review what the prices were. According to the printout I had seen, it looked like we had some sales in Kansas that were bringing 138. Also, some sales in Texas also brought 138. So basically, that would be steady with what we had had last week, I believe, or early this week. And then on a dress basis, it looked like in Nebraska, goodness, 14,000 head I saw on this report. 221 to 225, pretty wide range there. And Iowa also had about 10,000 head. They were bringing 222 to 225 over there. So we'll call that steady to higher than what we had a week ago. But if you look at what's been going on in the futures trade, let's go to live cattle futures. It's just not doing much here, Chris. We have April 30 cents higher, but June is 5 cents lower at 137.07. Just narrowly mixed over there. And with the corn kind of falling out of bed, you would think feeder cattle might respond a little bit. Well, you have April up a dime, but most of your action is in May, and it's down to 2 cents now. In August, down $1.02 at 176.55. So what's all this about? Why so weak in the knees on the feeders?
Well, I think simply because we have got such erroneous margins to be able to work with, profit margins. I mean, they're just absolutely horrible right now, and something has to give. Either the cattle feeder can find some way to find a cheaper feed source, or he has to pay less for the feeder cattle. The more he pays for both means that the fat cattle market has to be that much higher in order to return his input cost. And we're just at a turning point here to see whether or not the consumer is going to shift in their discretionary spending due to the inflationary pressures, or whether they can keep up with the inflationary pressures and just keep spending as they are right now.
Well, let's check out what's going on in our lean hog trade then. And as we get close to the end of the week, look at this, narrowly mixed with April down one tick, 2.5 cents lower. But you have the May contract 15 cents higher, just going nowhere fast. We're now at 113.72 on the May contract. The biggest movers are actually in those deferreds again. And you have June through August, anywhere from 42 to 57 cents higher again, widening out that spread against the nearbys. Chris, you have a great weekend. Thanks for all the help today. Chris Swift of Swift Trading here in Nashville. Janet, back to you.